In this video, I'm sharing my favorite way to play reversals on the market through liquidity sweeps, only this time we are talking about exactly how to trade them. So how to watch for them, what areas to watch, how to enter the market, where to set your stop loss, and also how to set your take profit. So there's a lot of videos out there talking about liquidity from a very high level. This one gets into how to profit from liquidity sweeps in the market as low as the 15-minute time frame. So if we haven't met yet, my name is Justin Bennett, Forex trader since 2007, full-time trader since 2011, and as always, all of this is my opinion only and not financial advice. So let's get into the charts here, looking at the 1 hour time frame. Now I'm using this time frame only to identify the trend here on the EURUSD. So this occurred here recently, and if you're watching this video after this trend formed, you know this price action here. But this right here, you can see the market was clearly making lower highs and lower lows. Now, we had a couple of setups here that occurred recently, and we talked about these in Discord, actually called out both of these on the DXY, which is essentially the inverse of the EURUSD. But you can see them both labeled right here. Now, before we get into the actual setup, what I want to show you is that this market was clearly making lower highs and lower lows. And a couple of things occurred here. I want to show you how to look for these areas in the market where you're going to likely get a reversal, and also think about, context on higher time frames. So for example, if you're trading these or any pattern on a 15-minute time frame, you want to use the 1 hour or 4 hour time frames to really identify the overall structure of the market and that context on those higher time frames. So in this case, again, lower highs and lower lows. And you can also see where I've talked about this before. I've made a separate video on what I like to call a distribution channel. Now, the point of this is not to nail highs and lows. We're not trying to use this as, support and resistance here in the market. However, you can see that clearly this market did find resistance up here at the upper band of this channel and support down here at the lower band. And you'll see this over and over again, and that's because markets love symmetry. And said differently, markets tend to revolve around a central point. Okay, so if you imagine a midpoint through this trend, and this again happens over and over again in a market, where you essentially get distribution to the buy side up here. You get distribution buy side here, buy side, sell side, and sell side. So if this is your mean within a trend, markets are mean reverting, right? So what that means is that when you get moves like this here, the market tends to snap back and oftentimes move in the opposite direction. Once again, up here, it snaps back to the mean. Then we get the move down here toward the sell side, and it snaps back, and it just repeats over and over again. So armed with this information, what we can do as soon as we get these first few highs up here, we know that this now is, potentially the top of a distribution channel. Now, obviously at this point back here, we do not have this lower band just yet. Okay, but that's kind of the first sign. Now, the other sign here is if we take this off, because we don't technically need this to find these areas. Because if you'll notice here on this move lower, okay, so going back here to this first one, if you'll notice here from this high up here down here to the low, if we draw out our fibs, you can see where the OTE lines up right here. So I've made a video too on OTE, which is optimal trade entry. And that's the area between the 62% and 79% retracements. And this was also a nice high up here, a nice external high, because you can see internal high here. We swept that, giving us an external high. We also had a BoS form through here. Okay, so break of structure down here. This is our external high. From external high to external low, you can see, again, OTE lined up right here. Okay, so that's the very first component. Now, let's take a look here at this price action. So I'm going to go back here and turn on bar replay, and we're going to look at this here in real time. Okay, so turning on to the 15-minute time frame. This is the time frame that I do like looking for these patterns. Now, you could use the 1 hour time frame, you could use the 5 minute, the 1 minute, whatever you prefer. I have found a lot of success with the 15-minute though. Okay, so looking here at this high, I'm going to remove this here just so we can start clean. Okay, so right here, we know that the market is in OTE. That's the very first factor. Okay, now what you're going to notice here is that we got a high up here, okay? And this right here is what we're looking for. So when you get this high that forms, notice how we wicked above. And remember, we are in OTE over here based on this high. So remember, this here on the 15 is what we just looked at on the hourly. And you can see this dark green area. This is where we're looking for a potential continuation of the downtrend. So that's the first thing. Context is key, right? Now, looking here at, again, this high up here, you can see that we had the market wick above here. So this is what's key. So it's a 3-step pattern. I made a video on this before. So it's, the first step over here. The second step here is that wick above. And then the third step is going to be to break the low, in this case, that triggered the sweep. So in this case here, we can clearly see that this right here is the low that triggered this sweep. So the moment that we get acceptance below here, which is just one close below, then we know we have a confirmed short opportunity here. Now, I want you to compare this to something like a change of character. So if you're looking for a change of character here, then technically you have to see the market get below here, because this up here becomes your BOS, okay? And it's an internal BOS. I want to make that clear, but a BOS nonetheless. So you could technically call this a shift, okay? And if we play this forward, you can see that we do get a break right there. So technically, again, this becomes more internal, okay? Internal BOS and internal change of character. But again, it could be a shift in the market. Now, I want you to notice the difference here, though, in this pattern up here, this liquidity sweep that we got off this high, stops formed up here, and we swept those and then had acceptance below. So in this case here, this was a rather large candle, so it's not that much of a difference, but you can see where this was confirmed, okay, before the change of character. So you can see the advantage here to using this versus just the traditional, break of structure, change of character. In this case here, where we had the BOS and the change of character down here, this right here does get you in the market sooner. Okay. And in my experience, this is a really, really reliable pattern. We've caught multiples of these in Discord here in the last few weeks. And so far they are undefeated. Every single one that we've caught from an area that is, significant on those higher time frames has played out. Now that's just the last couple of weeks. Obviously they're not going to have a 100% hit rate. Nothing does out there. But you can see the advantage of using this right here. So let's talk now about how to actually trade this. So in this case, right, you can see that we have this low right here, this close right here that confirms it. And then you have this high. Now, once you get this, okay, the only thing that would really negate this is if we came up and took out this high. Now, with that said though, when you are trading these, it doesn't mean that you have to set your stop loss. Okay, so like let's say if you entered here on the break, let's just say you have a rule that you enter as soon as you get acceptance. Okay, and I'm not saying that that's right or wrong, just as an example. If you were to set your stop loss up here, you can see that that would be about a 25 pip stop. Now, again, you don't have to do that. This is extreme, in my opinion, because in my experience, what you tend to get is on this acceptance here, the market may come up and fill in this imbalance right here, but the chances of you coming up even, into here are usually pretty slim with these. So you could technically have a little bit tighter of a stop loss. Okay, so something like this down here off of this high. Okay, something like this just to get you in with about a 21 pip stop, and entering here on the acceptance. Or if you're waiting for a retrace into this imbalance, then you'd set your limit order somewhere up here. Okay, but just for example purposes, if we just assume that we're gonna trade this as soon as the market accepts below, okay, with a stop loss above this high up here, which is really setting our stop loss and hiding our stop loss above this high right here. Not necessarily this one, but this high. Okay, just to kind of give us a little bit better risk reward ratio. So from here, what we can do in this case, because we have a downtrend and because we have this recent low right down here, okay, this would be the most logical target. Okay, so even if we do that right there, you can see that that's about a 2.75 R. Okay, so I mean, a really nice R ratio. So what that means is that your reward is going to be 2.75 times your risk. Now, of course, if you play around with this and you decide that something like this high over here is more acceptable for you, then that right there is going to give you a 3.7 R. Okay. In other words, your reward is 3.7 times your risk. But either way, either when you go with more conservative up here or down here above the high, either way, you're still looking at a favorable risk reward. I mean, it's still right around a 3R or 3 times your risk. Okay. So if we just drag this over here to account for any kind of time that's going to take for the market to get down here and play this forward, obviously we know this works out because we've seen it, but you can see here that if we move this over once again, play it forward, okay, the market does take its time. This was also right around the holidays too, or close to the holidays. So the price action has been a little bit choppier than usual, but right there you can see that if we go back to an hourly time frame, I mean, this was basically from the acceptance below here. So acceptance below over here to hitting our take profit. This was about 52 hours or so. So just over 2 days. And again, that right there is a 2.8 R or 2.8 times your risk. So, I mean, a really nice profit here, basically within about 48 hours. Okay. So that is the first one over there. From here, you can see that we get the move lower, the market comes back up. And from here, what you'll also notice is that from this high up here, which is our new external high, because remember that we do have a BOS now off of this low. Okay. So we have a BOS down here. That makes this up here our external high. Okay, and this was really nice too because again, we have internal liquidity here. We swept it with this external high. So this high up here now from this high, okay, down here to the low, you can see that right here, this dark green area once again, right there into the bottom portion of OTE. So again, perfect, right? We came right here into this area. So the moment that happens, then we know that we are looking for a potential reversal. And what do we have right here? Okay, so if we go back here and once again, drop down to the 15-minute time frame, I'm gonna get rid of this just so that it's nice and clean and see what we get. Now there's our first high. So if we draw a level off of here, we know the stops are building above here, okay? And let's just see what we get. Now, the moment that we get that wick above, I am immediately looking for a close below the low that triggered it, okay? So that right there is gonna be this low right here. Now, they're pretty much equal lows through here, but in this case, if this low was a little bit lower, then this is the one that I would use because this is the low that triggered the liquidity sweep, okay? So very, very important. So from this low down here, drag my level over. The moment that we get a close below this, I know that we have acceptance. All right, so moving forward here, let's see what we get. And you can see right there too that this level is protected. Buyers are trying to step in and defend this. Okay, so right there you can see that we do get the close below right here on this candle. Now, again, following our rules, right, the moment that we get the close below, we are going to enter. Okay, so very, very simple. Now, in this case, we did get a retest of this, but we're just gonna follow our rules and say we're entering here with a stop loss. In this case, I would be putting it above here. However, the one thing you've got to be careful of in this case is you do have a little bit of a fair value gap up here above the high. Okay, so you've got to be a little bit careful there with this. So in this case, you might have to go a little bit higher with this, like up here. However, in that case too, if your minimum is a 3R, which mine is, meaning that your reward has to be 3 times your risk, the issue with that is that down here to the lows, you can see it's about a 2.38. Okay, so that's kind of the issue there as well. So if you're going to get a 3R, you'd kind of have to go here. You'd kind of have to go above this high over here, which would give you about a 3.5. Okay, but you'd have to understand too that if you were to do that, you'd have to understand that there is a chance that you get stopped out up here. Now, even if the market were to move up here, I want to be clear, even if the market were to move up here and take out this high, it doesn't necessarily mean that this is negated. It doesn't invalidate this setup, okay? Because we've already had acceptance below this low back here that triggered the liquidity sweep. So this is very similar to something like a change of character, where even if we have a move up here in this area, it doesn't necessarily negate this pattern. Okay, so you've got a couple options here. You either put it above the high knowing that you could get stopped out. However, that gives you about a 3.7R, or you go a little bit higher up and you're looking at maybe a 2.5 R or so. So if we did something like this here, just to be a little bit more conservative and move this over in case it does take some time again, okay, and play this forward, let's see what we get here from the euro. So right there, we move around, we're chopping around a little bit, and right there, we get a little bit of a wick into here, but no big deal. All we're doing here is just taking out some of the liquidity that formed above these recent highs. Okay, so moving this over because it is taking a bit of time. All right, so playing this forward. All right, I'm gonna move it over again. Again, this was around the holidays, so keep that in mind that the market doesn't always take this long to play out. In this case here though, it is. So here we go, right there. Our target's hit. Now in this case, once again, if we move over here, let's take a look at the hourly and see how long this took. Okay, so from the drop lower, from the confirmation below that acceptance, you see over here to our target, we're looking at about 68, 69 hours, okay? So again, less than 3 days, to achieve a 2.5R. Now, if you had moved your stop loss down to this high back here, again, it would have been over 3R, meaning that your reward was more than 3 times your risk. But 2 examples right there. And again, in Discord, we recently, just last week, caught 4 of these on the charts, and every single one of them turned into a profit. And it wasn't even these 2, actually, it was 4 other different ones. Now, I do want to show you something here before we finish up, is if I go back here to this one. So what I want to show you is I want to show you something on the 1 minute time frame. So the reason that this pattern works is because, and for some of you, this might be an aha moment. It might kind of blow your mind here a little bit. If we look at the 1 minute time frame and just play this forward, it's going to take some time to play out. But right here, you can see that on the 1 minute, this right here wasn't a wick above. Instead, we got acceptance above. We actually closed above here. Okay, so that's a little bit different, right, on the 1 minute time frame. And then from here, we come down and we test this level. We bounce around a little bit, find support there. We actually close below a little bit earlier. But the point that I want to make here is that the reason that this setup works is because it is very, very similar to a change of character. In fact, it kind of is one. So a liquidity sweep on something like the 15 here, where you can see that we get the high and we get a wick above. On the 15, it looks like this. On the 1 minute time frame, or sometimes even the 5 minute time frame, you actually get acceptance above here, in which case it's more of a change of character. So this just goes back to the notion that it's not just a matter of drawing a bunch of lines on a chart and entering into the market It's about looking for the intent of the market, looking at what the market is actually doing under the surface. And all it's doing here is engineering liquidity above this high and then taking that liquidity and then reversing. So what's happening here is large sellers are piling in up here. And that's exactly what this acceptance above the high is. And then the confirmation is this. So it doesn't necessarily matter, okay, that you're closing above here on the 1 minute time frame or you're wicking above on the 15-minute time frame. Again, the intent is there regardless of the time frame. And so it's not just about this level, it's not just about this level, it's about what is the market actually doing here. It's showing you that large sellers might be piling in. This down here confirms it, okay? And you'll see this pattern over and over again, but again, context matters. Notice that if we go back to the hourly time frame, neither of these patterns occurred in isolation. Okay, we were not trading these in isolation. They were not traded in a silo. We had a downtrend intact. Both of these occurred with an OTE of external highs and lows. All right, so I hope this video has helped. If it has, be sure to keep it locked in here, subscribe to the channel, and check out the video right here too, because this is gonna show you how to identify premium and discount and that OTE area so that you can be much more patient when you're waiting for those trades. Until next time, trade well out there.